Good morning, everyone watching live on BAM YouTube. Let me know in the comments where you are tuning in from. The Hot Sheet covers what you need to know about the real estate industry in a 24-hour time period. On today's Hot Sheet, I will discuss Black Knight's home price index, gains from the pandemic housing booms, and which real estate companies lost their Fortune 500 status. Today is Tuesday, June 6th, 2023. I am Byron Lazine, and the Hot Sheet starts now. Good morning and welcome back. Hit the thumbs up. Glad that you are here with me on the live stream, and hope you're with me on BAMX. The link is down below. Become a better agent. Everyone tells you what to do. BAMX shows you how to do it. Right now, the Hot Sheet is the one podcast. Don't tell anybody. It's the one podcast on BAM that's giving out the 15% discount code. That is going away soon. So make sure you sign up for the annual subscription today. On BAMX, you get 15% off of the annual. We have new courses loaded up this month. The Perfection of the Green Screen course by the Broke Agent was just added amongst many others. We have live streams. I'll be going live Thursday, by the way, in the BAMX community, BAMX Mastermind with myself this Thursday. So sign up today. You get 15% off the annual. That's like less than a cup of coffee a month when you do the math, and I will see you in the community. All right, let's see what Black Knight has to say. Black Knight yesterday came out with their home price index, and I'm also adding CoreLogic, which just released their numbers this morning. So a little bit of numbers update. Then we're going to look at the pandemic housing boom gains and which markets are still strong. So Black Knight house price index, where we're starting, is a repeat sales index. Black Knight reports the median price. So they're looking at median price change of repeat sales. Okay, so I have a graph for the Black Knight HPI. It'll be down below in the daily download. The index is still up 1% year over year. So they just released their numbers yesterday. Yesterday's numbers reflect April. Okay, the index up 1% year over year, but will likely turn negative soon. Okay, as when prices started coming down in 2022 and we catch up to that point, the next month or 2 months, probably May or maybe June. It's saying soon. Could be this next report or the one after that. You'll say year over year for Black Knight in the negatives for home price index, still positive right now. April's 0.46 seasonally adjusted rise was down from March's revised 0.62% and roughly on par with the 0.49% rise in February. Okay, so despite prices firming up this spring, the annual home price growth rate slipped to 0% in April, the first time prices have been flat for the year over year since the rebound from the great financial crisis beginning in 2012. At this current trajectory, the home price growth rate would fall modestly below 0% for a short time before pulling back above water by late Q2 and Q3. So they're saying by next Black Knight report, there'll be year over year negatives. When you start to see these over the next 30 to 60 days, because others are going to report this year over year home price declines, make sure that you educate your clients. Make sure that you educate the people in your community, home shoppers, whatever it may be, that we've been seeing month over month home price gains for the last few months consistently. They need to understand that what they're dealing with right now in the market is month over month home price gains. When they hear home values are going down on mainstream media, which they're going to hear in 30 days, which they're going to hear in 45 days, based off of year over year stats, that's lagging data. Okay, that's more of an impact on the man-made, the Fed-made real estate recession that went into effect last year when they started to jack up interest rates violently, when they shot up over 7% in a very short period of time. In fact, the fastest period of time that we've ever seen rates go up, right? So there's Black Knight. I've got the chart for you down below in the daily download that you can grab, sign up once, and you get all of this stuff. Obviously, for those that have signed up from the beginning, you've had probably, I think we did the math the other day, it's like 600 or 700 charts and sources and data points that we've shared since we started doing the show in early January. A lot of these are going to go over to BAMX and get categorized over there. So make sure you sign up with the link below. Here's the Black Knight Home Price Index. Obviously, we had the dip at the end of last year coming into the beginning of this year. Now, Black Knight, amongst many others, are reporting month-over-month home price gains. Okay. The annual home price growth rate is now based at 0%, according to Black Knight, should drop down and then bounce back up, according to the trends that they're seeing. Let's take a look at this morning's release from CoreLogic. Okay. First, anything else on Black Knight? No. All right. Let's go to CoreLogic here. U.S. Home Price Insights, June 2023. So this is, again, they're looking back at April, similar to how Black Knight was reporting. Home prices nationwide, including distressed sales, increased year over year by 2%. So CoreLogic 2% higher than Black Knight in April 2023 compared with April 2022. On a month-over-month basis, home prices increased 1.2% in April of this year compared with March. The HPI, the CoreLogic HPI Home Price Index forecast indicates that home prices will increase month over month from April to May at a 0.9%. Okay. Currently, we're at 1.2% and 2% year over year. They're projecting we'll see a 0.9% increase for the next month, and that for the year over year, we're going to see a 4%, 4.6% increase. That's the forecast from CoreLogic. They're more bullish on year over year prices than almost anyone else. Okay. So, Zillow's in the camp and some others, but there's a lot that are reporting negatives on the year over year number. Nationwide single family home price growth rose by 2% in April. This marks the 135th consecutive month of annual growth, but the 6th straight month of single-digit gains, which have slowed from the all-time high of nearly 20% annual appreciation in spring 2020. Of course, we had 2 years of basically 20%. That's why many markets are still today up over 40%. We're going to touch on that in a second. Selma Hepp, chief economist for CoreLogic, says, while mortgage rate volatility continues to cause buyer hesitation, the lack for sale homes is putting firm pressure on prices this spring, leading to above average seasonal monthly gains and a rebound in home prices in most markets. Nevertheless, the recent surge in mortgage rates, which we've seen here the last couple of weeks, and continued inflation issues suggest that rates may remain elevated, leading to home price appreciation to possibly relax this summer and return to average seasonal gains later in 2023. Still, while some inventory is pushing prices up once again and constraining affordability, recent trends suggest that home price growth in 2023 will fall in line with the historical 4% annual average. What are you seeing in your market? State the market, and what are you seeing? Do you see historical trend of about 4% growth this year? Is that what you're projecting locally? Nationally, again, home prices increased 2% year over year, but in Arizona, California, Colorado, Idaho, Montana, Nevada, New York, Oregon, Utah, and Washington all saw annual home price declines. So in those states, again, Arizona, California, Colorado, Idaho, Montana, Nevada, New York, Oregon, Utah, and Washington, home price declines. The states with the highest increases year over year were Indiana at 7.3%, New Jersey at 7.1%, Missouri also 7.1%, and then South Carolina and Vermont were both at 6.9%. This chart here shows you which states have had those large increases. You see the Northeast outside of Massachusetts is covered in red. That would even include New Jersey and Pennsylvania. That outside of, Massachusetts and New York, covered in red, where you're seeing pretty significant home price increases. Massachusetts in the 1 to 3% bucket, and again, New York is negative or under 1% growth. The Southeast very strong, upwards of 5+% home price appreciation, and obviously the West continues to be in the negative category there on home price growth year over year. top markets at risk right now, according to CoreLogic, of home price decline. This is kind of reaffirming their last report. Lakeland, Winter Haven, Florida, confidence score 50 to 75%, meaning they're expecting a home price decline. Provo, Utah is number 2 on the list. Sarasota area, number 3. Cape Coral, Fort Myers area, number 4 in Florida. And Port St. Lucie, number 5 in Florida. So at risk of home price declines, according to CoreLogic, 4 of the 5 are all in Florida, while number 2, Provo, Utah, also on the list. This is just reaffirming the data that we saw last month from them, so nothing really new there. All of that, I think that was the same exact list that they had basically last month. Okay, let me know in your market, or what would be your confidence score on your market? What's the market in home price increase or decline this year? Like, and so they're putting a confidence score on these here of 50 to 75%. What would be your confidence score in your market? Love to know based off of what you're seeing in your market and the data that you're tracking personally. All right, so there's your update on home prices for Black Knight and CoreLogic. Here's a quote from Black Knight that I failed to read prior. Prices are now almost universally rising again on a seasonally adjusted basis. So, and they say that's with the expectation of Austin. So sorry to our Austin friends, but universally rising. So in 30 days, when you see, according to Black Knight, according to, this one and that one, year over year, home values are going down, home prices are going down. Remember that we need to help people understand that month over month, they have been going up, and they've been going up for the majority of the spring. And that's with the exception of Austin, according to Black Knight. The only market with for sale inventory back to pre-pandemic levels, which has faced significant price corrections continuing into the spring. Black Knight has Austin down 13.4% from the 2022 peak. Okay, Black Knight does say that we're not out of the woods yet, given that home prices remain 25% above what underlying incomes would traditionally support at today's interest rate. So going back to affordability, but remember, Black Knight, 42% of homeowners do not have a mortgage. Okay, so I guess we're dealing with 58%, and 85% of those have a mortgage rate well under 6%. So they're not paying today's mortgage rate. Okay, so that when they say that, that home prices are 25%, what today's interest rate would support. Okay, well, most of the homeowners don't have today's interest rate. It's why we're battling so much of the inventory issue. All right, so there's your update on prices. Let's go over to where home prices are since the pandemic. Okay, so since we've had pandemic housing boom gains, who actually still is holding on to all of those gains? Of course, Austin, as we just mentioned, would be one of those cities that is not. This is a Lance Lambert chart from Fortune based off of the source from Zillow Home Values Index. You can see here that dark purple or purple color. And so if you're just listening to this, I'll point out the areas where you have that dark purple. That is greater than 60% or greater than 50%. Almost all of the Southeast is covered in this purple to dark purple coloring, where you've got over 50% remaining pandemic housing boom gains. So even in areas, like Sarasota or these other ones that CoreLogic is saying is at a risk of potentially going down, they're still today sitting up over 50 and 60% of home price gains. So almost all of the Southeast is colored in that color. Texas is, a variety of different colors. You have areas where you have less than 10% of their home pandemic housing boom gains. That'd be areas like Austin, or you have 10 to 20% or 20 to 30%. You really have all of these different categories, and they categorize it as less than 10%, 10 to 20, 20 to 30, 30 to 40, 40 to 50, 50 to 60, and then greater than 60%. Texas is just littered with all of the different colors of this graph. And so it really depends where you are. That central area in Texas, east central area, I guess that would be DFW areas, is got some of the dark purple. Maine, really dark on the purple category. Most of the East Coast there is kind of scattered, right? You can see up in where I'm sitting today, Connecticut's got a shoreline that has a little bit less of a gain than the northwest corner. That northwest corner is like Litchfield, where you saw a lot of New Yorkers go and escape to. So a little bit of scattered there. That's kind of similar story in Massachusetts and New York and Pennsylvania. Then California, obviously, you go all the way west. You're at the lower end of these home price gains. They really only have one little block of the dark purple, and the northwestern part of the state of the country is showing still significant home price gains from the pandemic. So this chart here hope you understand which areas are still way up and which areas have lost some of their pandemic housing boom gains. Pandemic growth winners in terms of population, that same their Maine there is booming in population. Don't know how much that would be, but obviously Florida is on the list here, and then you've got northwest there, western part of the country's looking at pandemic growth winners. It's like, I guess that's Boise, Idaho, those areas there, which now you're seeing huge inventory and people getting out, and then of course Texas as well. All right, there's your pandemic update on who's still up on their prices. Who's not up on their stock prices would be these four real estate titans. Lance Lambert just reported the Fed's man-made housing market recession hit so hard that four real estate titans just lost their Fortune 500 status. Who are those companies? Let's take a look at the Fortune 500 list, where real estate housing related companies rank on this year's Fortune 500 list. Home Depot's at the top. Last year's rank was 17th. They have gone down 3 spots to number 20. Fannie Mae has gone up 5 spots from 33 to 28, interestingly enough. Lowe's also down 4 spots like Home Depot, and they are at 39. Freddie Mac at 45. So Home Depot, Lowe's, and then the two government arms of mortgage lending are in the top 4. Lennar, D.R. Horton, CBRE Group, Builders First Source, and Jones Lang make out the top 5. So you've got some national builders and commercial real estate company in there. Okay. You got Pulte. Opendoor remains on the list. Okay. Opendoor has actually gone up 159 spots. Okay. Their 2022 rank was 425. 2023 rank is 266. That's interesting because, I mean, if you just look at share price of Opendoor Technology since peaking at $34 in 2021, their stock has collapsed to $1.56. They just recently, Opendoor went up, and I'll get to the 4 that have fallen out of the Fortune 500 here in just a second. But just on Opendoor, if you look at what's going on last week, Eric Wu, the CEO, founder, really, I don't know if he might have stepped down as CEO. I think he did, and he's working a different division now. But anyways, the founder of Opendoor just sold $8 million in stock. Now he just filed yesterday, I believe, to sell another $20 million. Opendoor had reached $2. Now they're back down to $1.56, but they still remain on the Fortune 500. Interestingly enough, I wouldn't have guessed that, but still some value there apparently. All right, the 4 companies that have fallen out of the Fortune 500 would be Anywhere Real Estate, obviously formerly known as Realogy, dropped 90 spots from 427 to 517. Zillow from 424 to 563. I have no idea how Opendoor is on the list and Zillow's not. It makes absolutely no sense. Zillow's market cap's better. Zillow basically it's helping Opendoor stay afloat. I don't even, doesn't even make sense to me. Compass at 495, dropped 77 spots to 572. So they're out. And then Rocket Companies dropped 291 spots from 282 to 573. As you saw the refi market disappear, Rocket Companies dropped 291 spots. There you go. That is your Fortune 500 update. And one thing, if you're a real estate agent, notice that there are on this entire list, there are no longer any real estate companies in the Fortune 500. Okay. Meaning brokerages, rather. These are all real estate related companies, but there are no brokerages here in the Fortune 500. Anywhere in Compass were, now they're out. Okay. So the brokerage community still remains very non-monopolistic. It's a good thing for the real estate agent industry. That's very still much fragmented. There are still a lot of independents or large teams or team ridges. So there's still a lot of options for real estate agents. It also speaks to how competitive that is. And really, when you think about the job of the broker, how low margin of a business that is. And again, how competitive it is and how there's not a monopoly going there. So interesting data points there. Glad that Lance put that piece together. And again, just interestingly, Opendoor climbing the 159 spots. It doesn't really say why. I don't understand it. I'll look deeper into that, try to get an answer, but that kind of just completely blew my mind when I saw that this week. Okay, let's take a look at the 10-year and the 30-year. The 10-year was coming back down at first glance this morning. Let's see where it is right now as the markets have opened. And is it up? I think it's up again. Okay, there we go. It was down to early this morning. It was down to into the 3.6s. We're back up to 3.724. Yesterday's 30-year fixed. Let me zoom out here. Yesterday's 30-year fixed did drop down 0.01 to 6.89. So we've been living in that 6.9 plus range now for 5 readings, or 6.8, 8.5 and up, I should say, range now for 5 plus readings. So we've been out of the 7s for a week, and we're currently sitting at 6.89. The 10-year is up a little bit. We'll see what happens today. Hopefully we can stay sub 7 on the Mortgage News Daily's survey when that comes out later today. Also coming out later today would be the next Real Word podcast at 2 p.m. here on the channel. So make sure you're subscribed for that. See you back here tomorrow on the Hot Sheet, live every day, the internet's only live housing show, 9:30 a.m. Eastern and 6:30 Pacific time. Till then, toodaloo.